Shares of Silvergate Capital jumping today after Citadel Securities reported a 5.5% stake in the crypto-friendly bank, worth about $25 million based on Monday's closing price. For more, we got a Yahoo Finance's David Hollerith, who has got a glorious mustache. It's coming in well, brother. Looking good.
Thanks.
All right, we'll move on from the stash. Let's tell us the latest in crypto, buddy.
Yeah, so Citadel as well as Susquehanna Advisors have both increased their stakes in Silvergate Capital. And Susquehanna has a 7.5% stake as of today's filing, and Silvergate's stake is up to 5.5%. Now, Susquehanna would not respond to comment, but a Citadel spokesperson did point out that this filing came in a 13G form. And 13G forms are calculated based on options positions without counting short positions. So I'll just point out, as major market makers, both these firms, Citadel and Susquehanna, have to often purchase against the options market. So they have to sort of take both sides of the trade. Now, Silvergate shares are pretty beaten down. Last year, they fell by more than 88% from $155. Now, they're $17 on the day. And in its fourth quarter earnings, Silvergate showed massive losses, and most of that comes from FTX, one of its major clients. The company had to suspend dividend payments. It also had to lay off 40% of its workforce. More recently, also, a group of senators have been calling for Silvergate to provide more clear answers about whether or not it knew the extent to which FTX was using customer funds. Alameda Research, the company that spent FTX customer funds, is also a Silvergate, or was also a Silvergate customer.
Yeah, certainly lots of outrage, lots of upset lawmakers on the Hill just about what has all played out in the crypto market over the last several months. Earlier today, the Senate Banking Committee did hold a hearing on that recent crypto crash. Lots of talk about regulation. What can you tell us just in terms of the big headlines that we heard?
Yeah, at a high level, I think that there's always going to be some disagreement, but we heard unanimously that from Senate that clearly after last year's collapse, something needs to be done to come up with a more cohesive framework to regulate cryptocurrencies. Now, the two big issues in question is whether or not there are disclosures that are necessary for investors and then also banks. And the Federal Reserve and other agencies have issued a joint statement on the matter, sort of warning about the risks. Now, one thing that was brought up during the hearing was, how detailed risks need to be, and ways to solve this could come down to anything from, one agency overseeing crypto, banking regulators providing better guidance. And even one idea proposed was self-regulation, so having the industry's major firms sort of regulate the market and self-report. Now, obviously, there's probably going to be some combination of all of that, but I think it's pretty clear that after in recent weeks so many enforcement actions, that it did sound like a tenor of what was said in the hearing was that something needed to be done that was more cohesive to prevent what had happened in 2022 to cryptocurrencies.
Well, we will have to wait to see exactly what that looks like. David Hollerith, thanks so much.